Startups have been the new favorites of investors as they're expected to perform stupendously and make them rich. The entrepreneur's journey, however, is far from glamorous. Top funded or not, more than 9 out of 10 startups flame out within 10 years of being set up, according to research. Our next session is dedicated to finding the right balance between risk mitigation and returns expectations and all the hard work that an entrepreneur has to put in to convince an investor to buy into the story and support the venture with a much needed capital. Fundraising Setting Entrepreneurs for Success, chaired by Ms. Fatima Bacha, founder and CEO, Sulh Private Limited. For many people, leaving the stability of a well-paid job to start business might seem daunting. But it's a way of life for this serial entrepreneur. An alumnus of Carnegie Mellon and Crescent Engineering College, she embarked on her entrepreneurial journey with founding of Bacha Bai that provides fresh, hygienic meat to customers. She is now forging her way in enabling healthcare through technology with her ventures Sulh and Calls.
So you have an idea, you manage to do a prototype. You also manage to get a few customers. Now you need the funds to set up a full-fledged business. What do you do next? You hear of successful funding stories daily. You know your business is revolutionary, but where do you start? Who do you reach out to for funding? What does it take to be considered by a VC or a venture capitalist? You've heard of angels or angel investors, but where are they? Good morning and a very warm welcome to UEF World Summit session on fundraising, setting entrepreneurs up for success. If we could have advertisements during a session, I'm sure this one would be flooded due to the maximum viewership by entrepreneurs and future entrepreneurs. We have a great set of panelists with us today from different cities across the world. Mr. Gaurav Singh from London, Ms. Shahida Abdul Qadir from Dubai, Ms. Padma Chandrasekharan from Chennai, and Mr. Mohammad Ali Sharif from Bangalore, with experiences in investing from seed or angel stage up to series stage. Thank you so much for being here with us today. Gaurav Singh is based in London. He's a serial angel investor and the co-founder and partner of JPIN Venture Catalysts Limited, UK. Their group, Venture Catalysts, ranked top 7th angel and seed investor globally 2019 by Crunchbase. Some of our statistics on JPIN. They have a track record of 110 investments, 30 plus exit opportunities, and 6 billionaires backing the angel network, and 4,500 active angels, VCs, and family offices in their network. Today, they are building the largest UK-India investment and growth corridor for startups, bridging access between UK and India, the two largest and influential startup markets. He's an active investor in young companies. He's a business turnaround artist, a startup mentor, and a growth leader. Gaurav, please go ahead and let us know more about the great work that you do.
Thank you so much, Fatima. I have been following UEF's work for a while, and it's really incredible how you're bringing everyone together. From our perspective, our vision is to enable entrepreneurs and investors alike. Entrepreneurs do struggle. India generally has a lot of seed, pre-seed, friends and family investment, but typically when it comes to Series A, Series B, there is a global drought, and India is no exception to that. And for that reason, UK has always played a very large role in enabling entrepreneurs with the right kind of strategic capital in the initial and the subsequent rounds, which allows them to be able to achieve their visions. UK-India traditionally has had a legacy relationship. Indians last year, as I realized, were the top investors into the UK, and UK has been the top 6 investors into India. But this whole corridor exists in an unorganized fashion. It all comes down to who you know. And because of the different sophistications between UK and India in culture, in approach, in positioning, people struggle, and there's about 90 to 95% failure rate in successfully scaling or getting investments. And that's because we have been doing this in the UK for 10 years, is the reason why we are now spearheading this corridor, because we feel that the UK has a very strong appetite of investing large tickets in private rounds into startups, and India is where US and China were 3 years ago. or 10 years ago, sorry. And for that reason, UK is gradually opening up for larger and larger investment. And this is where we are now spending a lot of time in nurturing minds between UK and India to go ahead with investment. Governance is getting better and better, and that is really an enabler for entrepreneurs to be able to leverage and pitch that effectively. And also the Indian entrepreneurs who are phenomenal, they always had US as the immediate expansion plan. As US becomes more self-sufficient, it's getting difficult for them to access that. And for that reason, UK, Europe is becoming more attractive and is a very stable access location for them to be able to plan into Africa, and the US. And with so much benefits being offered by the UK government for businesses to come and set themselves here, that is something that we have seen a major trend, and we again are pushing it out to entrepreneurs to be able to not just benefit from investment, but some of the best minds that have come together to create some unicorns, especially in the fintech and other tech spaces. So I'm hoping with UEF's support, we'll be able to spread the message far greater.
Definitely. We look forward to that happening. And now, thank you so much, Gaurav. Now I'll move on to Padma. Padma Chandrasekharan is an angel investor and has mentored and continues to mentor and coach several startups. Those in Chennai have definitely heard of her. She's an executive committee member of the Chennai Angels, an angel investing group, and a charter member of the Thai organization, which is the Indus Entrepreneurs, a non-profit dedicated to promoting entrepreneurship. So she works across a wide range of industries, from analytics to alternate energy to healthcare services, financial services, and education. She was a founding member of SIFI Limited, India's first internet company, and part of the team that took it public on NASDAQ in 1999. Padma has not only worked for 19 years in the for-profit IT internet sector, but also worked for 13 years in the non-profit and research sectors with the Bill and Melinda Gates Foundation on various health, life science, and global development-related areas. Padma holds a bachelor's degree from the University of Calcutta, an MBA from IIM Ahmedabad, and an MBA from the University of San Francisco, California as well. She's authored several highly cited peer-reviewed publications in academic journals such as The Lancet and the British Medical Journal. Padma, on to you now.
Hi, what would you like me to add to this, Fatima?
Have I covered everything?
Well, I think you have. I mean, I, of course, also hold several board positions in, listed and unlisted companies. And I'm on the investment committee for a couple of VC funds. So that's more about myself. I don't think I have a particular agenda to promote, so I won't speak on behalf of anyone except to say that the Chennai Angels is always interested in partnerships with and syndicated investments with other groups. So certainly that group I can represent to you and say we always look for those partnerships, and if they're available, we'd be happy to consider them. And I would say good luck to all the people who are going to be watching this program, and I hope they get something useful out of it. And thanks very much, Fatima. I haven't consumed my 2.5 minutes, so you can use that for something else.
Definitely for more questions for you, Padma.
Be my guest.
Shahida Abdul Qadir is a management executive with 25 years of professional experience in several countries across a wide range of industries, spanning from fashion and jewelry to oil and gas to food and beverage. Currently, she manages her family's investments, where the family invests in tech startups predominantly, as well as in infrastructure projects. Prior to this, she headed up supply chain for a fashion retail chain, started 3 entrepreneurial ventures, advised clients on operations and digital marketplaces as a management consultant in the USA. She holds an MBA from Duke University, USA, and a BS, as well as a BA in computer science and mathematics from the University of Hartford, USA. She's curious by nature, loves traveling, and is prone to bouts of adventure, is what I've heard. Please let us know more about yourself.
Thank you. Thank you so much. When I first read all the folks' profiles, I thought, what am I doing here? You have a very august team here. I'm humbled to be here. Instead of telling you what I am doing today, I'd like to tell you what I did to get here. And I think perhaps the rest of the panelists might intimidate some of the young entrepreneurs in your audience, I think maybe some of them can relate to me. So I come from a very conservative Muslim family where women were not encouraged to get education or anything. My older sisters were married off when they were. So I grew up with a lot of incentives. I made a deal with my dad that if I were in the top 5 in my class, then I get to go to school another year. And I was in the top 1 or 2 every year. And this is what I want to tell everybody. You will hear that, you work hard and you will get there. Go after what you want and you will get there. And I think that is definitely true. But I also know today that luck played a huge role in my life. I think the very fact that my sisters were married so young, it helped my parents understand why it is important to educate me. My mom was instrumental. She herself only went up to 5th grade, and she would tell my dad, please, they call me Seda at home, please let Seda learn how to type. Please let her learn how to type, because she thought that if I learned how to type, that would be a way for me to get financial independence. And this is the other thing that I'd like to leave the audience with. Think about your horizons. How much are you able to see beyond where you are? And that's how you grow. My mom could only see me because that was her experience, a woman as a secretary or a typist. I was extremely lucky that I was able to climb a lot higher on a peak to see more, much more. I wanted to conquer the world. I became the first woman in my community to have to have a high school education. And then I left and did a great thing. I was so lucky. I went to the US for both my undergrad and my MBA. And I didn't stop there. I started working for Fortune 50 companies. And I just want to say that if I could do it, so can anybody else. But I also want to say luck played a huge role in where I am today. And so I paid forward. Like many of you here, I'm always available for people who want help or mentorship or want to bounce ideas. I usually leave, I never say no if you come asking for help. That's it.
That's such an inspiring story, Shahida. I hope everyone's really moved by listening to your story, from where to where you've actually come. It's been a really long journey, I'm sure.
Yes.
Thank you so much, Shahida. So we have Mr. Mohammad Ali Sharif. He's a partner at Mount Jury Ventures. He has around 19 years of experience in management consulting and supply chain IT industries. He served as the director of Deloitte Touche Tohmatsu, India LLP for 6.5 years, and also served as a manager at PwC before that. He has an MBA from IIM Ahmedabad and an MSc from London School of Economics. And he's also done his administration management from Harvard University. All of this after his BTech in industrial engineering. That's a lot of studying, Mr. Mohammad Ali Sharif. See, he's also the General Secretary of the Lifeline Foundation, a highly successful social venture which extends interest-free financing to deserving women entrepreneurs across 15 slums in Bangalore. So he has really covered microfinancing while he does venture capital funding on the side as well. Right. And in addition to that, he's also associated with Rebar, where they do a lot of alternate financing as well. So on to you, Mr. Sharif.
So thanks a lot, Fatima. Extremely happy to be part of such a wonderful initiative. First of all, thanks to all the organizers of this summit. I think it's a stupendous effort to take everything online in this very difficult year. Hopefully, we are reaching the end of it very soon. We are in the last month now. And so thank each and every one of those who organized this. And it's a great platform to reach out to, as many people across the world. And I acknowledge UEF's efforts in this regard. And also a pleasure to come to know and get to know about all my co-panelists. Happy to see our my co-alumnus Padma. Hi there, and really an inspiration, and happy. Looking forward to this session as well. Very quick brief about what I've been doing past 3 years after leaving. So at Deloitte, it was business as usual, working for a company. But then I thought, hey, now is the time to be an entrepreneur. If there's any time to do your own thing, it's actually yesterday. So it's the best thing for a lot of people like me who were working for organizations. Taking that plunge into entrepreneurship, I think is something which is extremely liberating. I would strongly encourage it. After having worked for many years in organizations, which is very critical to give you a very strong base to understand how organizations and businesses work. And then, coming into this entrepreneurial venture and, going through all the struggles for the last 3 years, but it's been enjoyable all the way. So I think, and I think I share this sentiment with a lot of our audience out here who are, again, entrepreneurs themselves. It's really a fantastic journey. And those who are yet or thinking of taking that plunge, I would strongly encourage them to become entrepreneurs themselves. Create value, generating value, doing things what you have always dreamt or imagined or wanted to do. I think it's a fantastic thing, and I think that's common across all the panelists here as well. We've been working across many places, but then we've again taken the plunges, and I'm sure each and every one of us can vouch for what I'm talking about. So looking forward to the session. Very quickly about Mount Judy. Of course, we are a new venture capital firm, just 3 years old. In fact, happy to say that we've just emerged out of our first transaction a couple of months ago, and that's our first investment. So a small fund, but with great dreams. And we'll talk more about it, I'm sure, in this session later on. So thanks, Fatima, and look forward to the session.
Thank you so much. So my first question is for Shahida today. So Shahida, we have a lot of young entrepreneurs watching this session. First and foremost, what should entrepreneurs consider when fundraising?
So a lot of things. The very first thing they should ask is, do I really need the funding? For me, this is the most important question. Do I really need the funding? What will happen if I don't get the funding? These are the questions they should first ask. Because when you ask people for money, there's a lot of things that you give up. You will be diluting your equity. You may have some restrictions imposed on you. You will be liable to many more people. You have to report to a lot more people the more funding that you take. So first question is, do I really need it? Second question is, what is your product life cycle at? For example, you need to show that your product or your idea is growing. You have really good metrics on whether it's customer acquisition or whether it is whatever the metrics are by which you are measuring your success. You must show month-to-month growth. And if it is a tech startup and you're trying to get angel or VC funding, it needs to be in multiples. It cannot be incremental growth, but you need to show those. That's really important. And you must show revenue. I personally, and maybe some of the panelists will disagree with me, but I am not really excited anymore about growth at any rate. I do not support this at all. I want to see that there is a path to sustainability, that you can actually sustain yourself if you do not get funding. And these are the questions. And the other most important thing is, if your cash flow right now is if your runway is only 6 months to 8 months, you're already dead. If you're trying to raise funding at only 6 months out, you're not going to make it. So for me, these are some of the most important things to ask yourself when you're raising funding. Yeah.
Thank you so much, Shahida. On that note, I would actually like to ask Padma, because you had mentioned that you wouldn't really want to fund companies who are not making revenue, right? So Padma, you've done several angel investments. This is also the stage when the risk is quite high. and also a stage where many startups, maybe they have no traction or revenue at the moment. What is it that you would look for before investing in such a startup?
First, at the risk of being a little upfront, I don't recall when I said that I don't look at revenue, but it is actually true, so I won't dispute that. I do like to look at companies which have traction, and traction in my mind means having a few paying customers or, revenue as you put it. So come again, what was the question? Because you had a long preamble.
So there are startups which have an amazing idea, right? But
Right.
the cost to execution or to create a prototype is significantly higher.
Yeah.
In such
So
a case,
let me. So you're basically saying, why don't people fund business plans? So this may be a little inequitable, given that not everybody will have friends and family to look to. But that to me, friends and family and loss of your own salary or, working part-time, that to me is a measure of the sacrifice and the passion that you as an entrepreneur put in before going out to seek outside funding. Did I answer your question?
Yes, completely.
Okay.
And also because there seems to be this gap, right? There seems to be this funding gap for ventures who are at the initial stage of development, right? There's a lot of funding available for companies in the growth phase. But what about those who are in the initial phases? So that's why this question came up. And also for those who just started up, if you think are there other external funding options are not available, so how would you help as an angel?
So if I'm assuming that you want me to continue answering that question. So I actually think that the funding gap is not such a large thing when you're beginning. See, first of all, I don't expect someone to write a business plan and get funding. That's for competitions and, BIRAC grants or, government grants or something like that. So you have to show traction. And if you have to show traction, you've got to put in some of your own, salary, a part of your salary, your wife's salary, your father's, house, on mortgage, something like that. So you've got to, put something that really matters to you, not just your, your ideas saying that this is my great world-beating idea. So I think the real funding gap, as Gaurav pointed out in a pre-seminar conversation that I had with him, is actually what I call the death valley between angel seed and a Series A. That really is the gap which I think maybe appropriate for me maybe to hand over to the next person to talk to. So Fatima, did you get what you wanted from my answer, or you want to probe some more?
No, yes, I did, Padma. So I think it just flows very seamlessly on to Gaurav. If you could explain
so
what would happen.
I think Padma have absolutely, I think, nailed the point. So, generally what we've done is we've seen that there is a gap where, there are amazing ideas at a concept stage. It's very critical, as Padma mentioned, that you have to have some of your skin in the game, because then it is your investment and you don't let your investments down that easily. But I think so. We have launched our 9 Unicorns Fund with an intention to make it the largest accelerator VC fund of India. We've already, we want to fund around 100 to 200 startups at a concept stage, and we want to mentor and accelerate them for 3 months so that the foundations come together correctly. And after that, we've seen those who have done, then we will again help invest into them from our own capital, from also side. But what in entrepreneurs, I think they dilute they're very desperate. And I think what Shahida mentioned quite aptly is you need to, it should not be a view. First, the foundations need to be right. It should be a traditional view of a business that, COVID has hit. Fortunately, because that is the lens that we have typically made investments in, investments are doing well. They can easily turn the dial up or down to not go down. And that, I think, is a very critical testament of people who money, and then that is not revenue, so that is not success. The moment the tap stops of further capital, they don't have enough revenue, they struggle, they get distracted, and they know in 2-3 years' time it just kind of shuts down. So you have to have a more stable long-term view. If you are a good business, good entrepreneur with a clear mindset of how you can make money, not just spend it, how you're going to make money, things will naturally fall in place.
So Ali, how would you like to add to that, please? Because you invest in Series A as well.
In fact, I fully concur with what has been said so far. In fact, when we were starting this venture, we focused on Series A, pre-Series A, precisely because we saw this huge drop, especially in the Indian context. We compared with, say, China or the US, where the markets are more mature. And we saw that the continuum or the drop of number of companies which have successfully done seed and angel to the ones who successfully do Series A, the gap was not very wide in those countries, but in India, the gap was so huge. And that clearly pointed out to this, lacunae or a vacuum of Series A, pre-Series A players. And that's what we said we'll focus on and pick up companies which have been coming out of, even the atmosphere today in India is vastly improved. They're, apart from a very good network of angels, we also have more than 350 accelerators and incubators across both academic institutions and, government-backed institutions, and even private companies have set up these, and therefore startups who are in it and serious for the long term, start with the seed funding, what Padma pointed out, putting in their own funds, then move on to going to incubators and accelerators where they get coached in a way and get drilled. How do you align yourself? Then go to angels, again back to Padma, I would say, and then a year or two down the line, come up to the pre-Series A, Series A level, where companies like ours are keen to look at these kind of startups which have been through that path, and we are fairly confident that institutional effort has gone in both in terms of mentorship, incubations, and angel networks who add great value to bring it to the next level.
Thank you so much, Ali. Padma, you wanted to add something?
So if there is time for a last 30-second wrap up. So what I would say is, for any first time entrepreneurs, self, friends and family, angel, maybe seed, and then, large institutional rounds after that. Did I capture what you said, Ali and Gaurav and Shahida? All right. So, but that doesn't mean a discouragement. I'm just saying that is the path. And I haven't seen any first time entrepreneur get external to your, self, friends and family on the basis of a mere business plan. So,
I think that is very helpful, Padma, for entrepreneurs who are actually watching.
Maybe negative. But
at least that's a real story, right? Yeah. It makes sense if you just go down this path rather than, being wowed by the news stories that you see on paper and on, right? Yes. So on the same note, so I'll come back to Ali. So now for these kind of companies, right? So those companies where you actually invest in Series A or pre-Series A stage, where they actually may be, expanding to different geographies or different sectors or products and services. What is it that you look for now that the company has been around for maybe almost 2 years at least, and we have gone through a seed or angel round?
Yes. So, thanks for that. And I think, fundamentally and what we all look for, and at any stage practically, I would say is, a good, promoters and founders and a core team, a strong core team. And that is fundamental at any stage of the business, whether a company has even reached IPO or, it's just made a business plan in a laptop. So I think that is very critical, especially people who have got solid experience or related experience in a field and are then, coming up with innovative ideas and want to, so that commitment, even though you might be, for example, you might just want to start out of college, and we've come across some of these, very good startups, which have been started by very young people out of college, but then in the edtech space, for example. But what they did during college as well was that they tried to, they were engaged in, whether it was engaging in teaching their classmates or, to other colleges, and they tried their hand at small business ventures, even at that stage. So, that commitment, that, passion towards their field, I think that's very critical. The second point I would say is, an innovative product or service with a strong USP or an IP or basically some barriers to entry which you are creating or which you've created, which could grow. Then I would say, by the time they would have reached pre-Series A, they would have some customers to speak of. So a positive market or customer feedback. A good potential demand and market size is again very critical from the future perspective, because we are somewhere in between, right? Pre-Series A, we have a long way to go. So the market size should be strong, should have a huge potential. And I would like to reiterate the point which Shahida mentioned earlier and Gaurav also said about strong unit economics and, profitability. I think that's very critical. At least at a unit level, we understand that initial costs are higher than revenues. That is the way it is. But there should be at least a path to profitability when you come to a pre-Series A, Series A kind of a stage, where with this money, within a year or two, you will start showing profitability, and then the Series B, Series C will pick up. And also improvements and investments in your product or service roadmap. It's not that, you've created something and you're stuck with it. How are you going to be agile in your product service roadmap? And I would say the last point I would say is the absence of any ethical, social, or governance concerns is also very critical what we look at. Have you strengthened your governance mechanisms? Or are you just, you have all the signatory authority, or have you created the audit committees? Have you involved mentors and experts? Are there any ethical or social concerns in your business? I think those would be, encapsulate what we are looking for. Thanks.
So great. Thank you so much. What are the mistakes that you see entrepreneurs making while fundraising, and what could they do differently for better chances of funding?
So there are two things. And so the number one is communication. I always say, if you want to raise funding, first of all, you should know at least a year and a half in advance your plan to do the fundraising. In that time, you must invest in looking at who are if you're in the angel stage or if you're in Series A stage, whichever stage you are, you need to start building a database of investors who have invested in similar products or similar, so for example, Ali here likes, I think in medtech, is that what you said, medtech? So if you are in the medical technology field, make sure he is a friend of yours before you need funding, which means as you start, he's now investing at Series A level, as you start sending him information, Ali, we're doing this, these are our milestones, this is how we reach. Send him notes maybe every quarter, every month if you can, but not like love letters, like 3 bullet points. This is what we accomplished in the first, this month. Oh, this is a snag that we hit. This is how we recovered. 3 bullet points. Now you're on top of his mind. He must be getting hundreds of such emails, but now you're different because you have taken the time to understand him, what he likes, and you're addressing those. So this is, I think, many entrepreneurs miss this great opportunity. People love to help. We love to help. Everybody likes, because it makes you feel good. So make the relationships before you ask for funding. Once you know you're ready, he already knows everything about you. And you say, could we have a meeting? This is what we're going to do. He's going to say yes. So I think this is, if I would give you a number one, is communication and build your relationships before you need to cash in that chip. Does that help?
Yes, thank you so much, Shahida. And for budding entrepreneurs, I think this is key. All of you actually have to start touching base with those who you believe would invest in your company. So maybe if any of the other panelists, if you would like to also contribute to what mistakes you see entrepreneurs making so that our audience can actually avoid it.
Yeah, I would like to just mention one more point here. Normally, we see a lot of business plans, right? And sometimes, more often than not, I would say, the business plans are quite extravagant and out of touch with reality. I mean, it's like I'm doing 1 crore of revenue this year, but guess what? I'm going to do 10 in next year and then 100 in the 3rd year. And with no, concerted plan on how you're going to get there. It's just like, okay, I'm in 1 city now, I'm going to be in 100 cities that does not answer, the challenges which come with growth, etc. So especially even when you're putting business plans, it has to be, and the projections, they should be believable. Yes, they should be aspirational. They should be, optimistic, no doubt about it. But then, link it to what actions you are going to do to make those growth projections a reality. Oftentimes I've seen, a lot of business plans which, project the moon saying, oh, we are going to be a unicorn in 4 years. I mean, that's another mistake which I've often seen people make.
Padma and Gaurav, anything you would like to add?
I think one of the things that I've seen entrepreneurs, the two mistakes that they typically make, they think it's free money. They do dilute very, very quickly. What they don't realize are the consequences. It's, you will fail. There's a very high chance that you might not be successful in the first one. But what investors are looking for are people and their transparency and governance, because it might not be your first venture, but they loved what you did. It might be the second one. And a lot of people, I think, poorly utilize that capital. Secondly, generally, we recommend that you should always reach out to a breadth of investors from different geographies, because that allows you gives you visibility on different ups and downs that regions have seen, and it shapes a global mindset right to the and I think thirdly, it's very important to not give up. People, they dilute. They never get over the feeling that we've over diluted, and over the next round or so, their motivation has kind of died, and they move on to the next glittery thing. So it's important to keep on digging till you see light of the tunnel. Again, you have to give a good hard stop. If you have raised monies from people, then don't give it up that easily, right? And it really talks about your gravitas and your grit.
So just to pick up where Gaurav left off. So, I think that the entrepreneurs have to think about what's the raison d'etre for the investor to put money in. Put yourself in his shoes. This is, not free money, not government money, not grant money, nothing like that. I mean, even grant money, I used to make big multi-million-dollar grants, and I would expect a social return and performance from the grantee. So, think about the investor. And so I won't expatiate unless you want me to, expand a little bit more on that. I'll just say, think about what does the investor want out of this? Why is he putting money in? Certainly he expects a return. He's not just giving you the money because you're his, uncle's friend or something like that. I think the second thing, a point which you raised earlier, Fatima, is what are the other sources of, capital? So, risk capital, as Gaurav pointed out, finally is dilutive in nature. So I would go back and explore and see if I'm already revenue generating, is there, credit line that I can get from a bank? Even, and if you look at the Indian situation, certainly, I think Indian banks are a lot more open now to giving, money against revenue, well, collectible revenue, not, paper revenue, by the way. And, there is grant revenue if you're in medtech, for example. I think I do see a lot of BIRAC funded companies which are, actually in serious business. In fact, there was one that I saw a couple of weeks back, which I think we finally decided to put money in. So look at the alternative sources of capital as well before you go to risk capital. And I think anything is risk capital which is beyond friends and family. And friends and family will forgive you. So one hopes.
Yes. Thank you so much. I would like for Ali to actually add to this on alternate modes of financing, please.
Yes. So thanks, Padma, for bringing that to the point. In fact, just to highlight to the audience as well, another company which we've been running for the last 7 years now, called Rehbar, is into the space of alternate financing. And this company looks at what is the need of the business, and this is for mature businesses or for startups who've kind of come to a revenue stage, collectible revenue, like Padma said. And so whether if, for example, a lot of retail stores, etc., need trucks. So, it's not necessary that you use the equity money for that. You will easily be able to get operating lease kind of funds for that. And so, that would, not dilute you, very importantly. And secondly, it would give you, scalable equipment. So you're using, that money, and those companies understand the risks associated with it. You get a good market rate out of it. So operating leases, even working capital and profit and loss sharing agreements are there at Rehbar. And I'm sure there are a lot of venture debt companies today as well in the market who once startups have been funded at various levels, are happy to offer a credit line, and sitting on this side for us, for example, looking at MedTech, having a BIRAC grant or a Government of Karnataka Elevate grant gives us a lot of confidence, not only from the perspective of that money which is coming in, but also the fact that, more other people have also assessed you and you've come out tops in that. And, so those are again very important indicators. So be cognizant, find out in your space who are those, at early stages, there are impact investors. Again, so many of them now in the country. So, having that variety of people as on your investment prior to coming to the new round, again, is a great help.
That's great that you give us an overview of different types of alternative modes of finance available. It's not just VCs, everyone. So something that I would like to close with, we all know that at the end of the day, it's not actually just the business plan that gets funded, but it's a story. What are your thoughts on it? So maybe we could start with Shahida, because she actually was very passionate about it. She's like, it's the story at the end of the day. So please, Shahida.
Yes, I love stories. Who doesn't love stories? Our life is about stories, and make sure, this is the one advice to all entrepreneurs. Anyway, entrepreneurs, we have a different DNA anyway. If you are already in this, you are already one of the winners. Whether your venture immediately wins or fails, it doesn't matter. The very fact that you took your step forward into it already makes you different. And tell your stories. Like, I learned about storytelling from my father. My father was, he came to Dubai here on a ship. He was just telling me the other day how he came. He also grew up in this tiny village, and I think he's like a lotus. How he came here and bloomed, and he's done so much for me. His stories are amazing. But today, if you look at the companies that you admire, and I apologize, I look a lot more at the US companies than Indian, but even in India, there are great stories. I just read all 250 odd pages of the Airbnb's S1. I love this company. By the way, entrepreneurs, please read all the S1s that are coming out. You will learn a lot about the financials and margins, et cetera, so do that. But who wouldn't want to invest in plucky kids who started Airbnb because they couldn't pay rent? Two friends out of school, they needed money to pay rent. There was a conference happening. They bought a couple of air mattresses and said, right, let's rent out our living room with an air mattress. And they started this company like this. Who doesn't like story about Bill Gates and Steve Ballmer, sitting in the garage, or even about Bezos? So please get your dragon slaying stories, because people, we love, all of us, we love these stories, and that tells the investor what kind of personality are we dealing with. What does this person do? Is he plucky? Is he risk-taking? Does he have planning? So this, I think stories make the world go round. Yeah.
If I may add,
I hope that was good.
Fatima, if I may extend that, I think, that is, see, ultimately, we all, I think, positively suffer from ADHD nowadays. I think, we literally have a 3 to 5 minutes max, because anyone with 10 pounds in the bank account will get 1,000 pitches a day, right? So, it is very clear we don't have an hour, right? No one will have that hour. If the story can't sell now, it won't sell in the next round or the next round. So keep it simple and clear. And I think I'll just give one quick example of Ritesh Agarwal, the founder of Oyo. He is, we just hosted a fireside chat with him in the UK day before, and he's one of our shareholders. And the story is so simple that, right from the onset, when he was 17 years old, one of my co-founders, Apoorv, he helped shape the business plan. But his story right from the onset was to create and give a better lifestyle to people as part of their travel, and without compromise. And he, from that point, when we made the first investment till now, he's a decacorn, right? Backed by SoftBank. He's the youngest billionaire in the world. But his story is still is very similar, where he wants to continue to do that for the next 60 years. And I think that story is what sells to people to invest into you. At that time, your business plans, all these are great, but they are finger in the air, right? So, that passion, that energy, that transparency is what sells people.
And Padma or Ali, would you like to add to that?
Yeah, so, when you say a story, absolutely, I do agree that there has to be a proper communication. You have to tell me what you're doing, why you're doing it, what's the market size, all of those elements come in. I think the little bit of extra is the passion and the energy that you bring to that story. I'd also add, I like to, to make a call on how persistent somebody is. You really have to be persistent to be a successful entrepreneur. You cannot give up, you may pivot, which is okay. You may pivot a little, you may pivot a lot, but you have to be persistent. And that, I guess, is a little bit of a judgment call that you have to make based on the person's background and so forth. But there's one thing I'd say to entrepreneurs here, apart from the story part, bring persistence to whatever you're doing. In addition to all the good things like ESG, etc., which I do expect. To me, that's like a minimum. So over to you, Ali, in case you want to add to that.
I think, the attention to detail is also very critical. Even your logo or your color scheme, what was your thought behind it? And that has to be thought through as well, because it should gel with, your story. And like I said, the passion comes from commitment, consistent commitment to that idea. And that has to be demonstrable. Like these, and stories do that fantastically well. Why are you doing what you're doing? And, for example, even the way you've thought out your company's name, everything, if you're able to communicate that, that really matters a lot, I feel. And what I would say is today in India, especially, it's a fantastic opportunity. We are at a cusp of growth, and there are a lot of players out here. In a short span of a couple of years, we've already heard 400, 500 such stories, and there are many, many people willing to listen to you, and then those who agree with you. There are funds out there. There is money out there to help you, to support you, and really, it's a fantastic time and age to be an entrepreneur. So come forth, do not hesitate, build strong teams. I would say that becomes a very critical part of your story. Each one of you brings your own experience and your own passion to that. It's not necessary that every one of us has an original idea, right? But we can join someone who does, and then we add that much more strength to that idea. I think that is also, a very critical part of the whole piece. So,
thank you so much. And one last question that I have for the women on the panel: what would you like to say to women entrepreneurs, and how is the world different today than it was some time ago? And also, especially to Padma as a woman investor, also if you could touch base, that would be great. So Shahida, maybe you could let us know how it is for a woman-led company. And Padma, if you could tell what it's like on the other side as a woman investor, that would be great.
So for me, it was a huge struggle from where I was, when I was a young girl to where I am today. It was a huge struggle to be where I am. And I'm very grateful, really, really grateful for my parents, my father especially, really, really, very, very grateful. But what I see today and what is really exciting for me is women are rocking it. For example, in Dubai, 50% of the cabinet positions are here filled by women. 30%, more than 30% of all tech startups in the UAE are with women, at least one woman co-founder. So I feel women are very collaborative and they help each other. I mean, just this example, look at you, Fatma. I'm so impressed with you. You were doing meat delivery company to now you are doing an AI-backed tech startup. I cannot wait to hear more about this. So I think women is now I'm part of I started as part of one of the women-funded accelerators here called Womena, and Womena has reached all over Middle East, including like Algeria, Egypt, and Morocco, and everywhere. They're looking for women-founded startups, and they're funding them, they're coaching them. So I'm very, very bullish on women-led start. We just need to support each other, and we need to be collaborative and we need to support each other. But I'm not worried. I'm not worried that women are going to get left behind. I'm not worried that women are not going to speak up anymore. I'm not worried. I'm really, really feeling very positive about women. So it is still, I don't want to just be all rosy. I know we still have a lot of problems. I know that there are women get, even in the US, I think for every dollar that male-founded companies get money, I think it's like 6 cents or some ridiculously tiny amount that a woman gets. So I know there's problems, and I don't want to just brush it under the carpet, but I am very, very positive, and I'm extremely grateful to UEF for making this one of your causes. So I'm here to support. And yeah, good luck.
Thank you so much, Shahida. Yes, definitely the world's getting better, but we still have a long way to go. So over to Padma, please.
So, yeah, just to pick up where Shahida left off, which was talking about the percentage of investments that go to women as opposed to men. I think that, that's a historical legacy that over time will get corrected, but I think people have to keep making active efforts to point out the data so that it's in the forefront of everyone's minds. And, so maybe a personal, anecdote that I want to give you. I am a investment committee member on a fund called Funds, Achieving Women Entrepreneurship. It's a women-focused fund. I mean, as in women entrepreneurs or serving women or companies with a majority of women employees. And I remember I'm also an investor in the fund, but when the fund first, when idea was first mooted, and I was saying, hey, look, you can't make an investment thesis based on just I'm going to serve women. But then as I started looking at the data, I could see that from an investment perspective, there is certainly a temporal gap, a time gap right now when it's opportune to make that investment. And so, I did finally commit an investment to the fund, and I sit on the IC and I do look at the investments that come in. And, we are getting a number of very good applications from companies that are either started by women or, where women are one of the, co-founders, where they maybe serve a lot of women, have women employees and so forth. And so I think that effort has to sustain in order to correct the historical legacy. I think you can't let off on that effort. It's not that there is any conscious effort to discriminate against women, much as there is, I don't think, conscious effort generally to discriminate against, let's say, people of a different color or people of different religion. It just happens. And if you let that, continue, then that, balance is never going to get corrected. So you've got to speak out and you've got to actively support. And that's, I think, what will happen, will turn the tables and, equalize in the end. Did I answer your question, Fatima? Good enough? Or you want something more?
Yes,
okay.
And so glad to hear about the Funds, so glad to hear about Womena. There is so much of significant effort going into actually encouraging women entrepreneurs. So for all the women out there, please get started if you haven't already. So I think it's been such an insightful session, and in such a short amount of time, I think we have practically covered everything that a budding entrepreneur needs to know about raising funds. Right? We have started from what Shahida said as to you should start connecting with the investors that you would like to get funded from later on. And Padma gave a great overview of the journey that they should be taking while Ali told us about the alternate sources of funding as well, and we don't just have to be on the trodden path. And Gaurav actually told us what it takes and what it does not take to actually go into Series A. It's been such an amazing session. Thank you so much, all of you. I'm sure our audience has been delighted listening to all of you. So right now we'll open the floor up for question and answers from the audience, and we'll get started right away. We can see a lot of questions actually coming up from the audience right now. And having listened to the session on fundraising, I can see people are really getting excited about starting right away. And so the very relevant question has been asked by by Mohammed Ismail. What does the COVID-19 crisis mean for the Indian startup funding ecosystem? Right? We all think funding is not really happening, but what is the real story? I would like to start with Shahida.
So long as there are entrepreneurs with amazing ideas and exciting ventures, there will be people willing to fund you. So it's always, fundamentally, everything is the same. You have a great idea, you're showing traction, you're showing paying customers, there are people ready to fund you. And some of the greatest companies that are actually going IPO right now started during a crisis. Airbnb is one of them. It was in 2007 they started. So don't hesitate. If you have a great idea, go forward.
That's great. I think VCs also know that this is the best time for them to get companies funded, I guess, with higher rates of being successful. So Padma, if you can please share your experiences as well, that'd be nice.
Yeah, so I will second what Shahida just said. Absolutely. I don't think funding has stopped or, slowed down. I think the focus may have changed. Both sides are now conscious of the need to have a clear, very, very clear path to profitability, no more profligate spending on customer acquisition and so on. But absolutely, yes, I myself have seen personally, either because of the, investment committees I sit on or personal investments that I made through, sources, at least 5 or 6 investments in the last 6 to 8 months. So that's quite a bit actually. So it's in no way do I see a delta from last year to this year. So I would encourage everyone to soldier on and keep at it.
So entrepreneurs, absolutely no reason to worry. Ali?
Yeah. So even the data points out to that. In fact, H1 of this year, the total funding from VCs in India was just around 2% lesser than, H1 of last year, which is just amazing considering that, we went through that tumultuous April, May, June, where pretty much everything was shut. And the other thing is the VC industry in India also got together and created something called an ACT fund. Which was a $1 billion fund to fund, COVID-19 responses. Nearly 55, startups got funding through ACT, which was essentially grants and loans. So again, that was another great initiative. In no way is funding reduced. In fact, I think people are looking for good, sound deals even now. And the pace, in fact, if I would say in certain sectors has, doubled. I would say EdTech, healthcare, food and packaging, those are industries which are really benefiting actually from this whole crisis as well in terms of funding. And yeah, so go on,
That was amazing, Ali. And Gaurav, if you could also add to that, please.
Yeah, so I think we ourselves have made about 30 plus investments in the last 8 months. The best part is that you're talking about the investor mindset, because real estate is down, listed equities is down. People have very quickly adapted to investing in these kind of opportunities, which is tremendous. What has definitely happened is a lot of natural deals have kind of sort of organized themselves where there was a lot of spend on cash or brick and mortar. Those have kind of sort of gone away, and more lethal deals which can scale up pretty quickly, which can benefit on this whole transformation is something that is really taking a lot of pace. So absolutely, I think this is the right time. Make sure your business has the right resilience strategy, and there's enough capital, I think, at the moment.
I think that's all way more than what everybody expected was happening in this area of fundraising, right? So I think we're short of time, so we'll have to come to the end of the session. I think it's been an amazing panel discussion we've all had. Shahida, an avid blogger, she's actually created a document for the audience where the document is called Why Investors Say No. This is available in the help desk. If you go there to the thematic sessions, you will find this document that you could download and read it up well, and you can actually get your investors to say yes. With that, thank you so much for being a great audience, and thank you so much to all our esteemed panelists.
Thank you.
Thank you, Fatima. And thank you
all the
to
best.
the organization. All the best, and look forward to being in touch with each of you in the future. And good work, Joe Space.
Thank you very much.
Well done.
Bye.